I'd like to ask you, Julie Blank, what is the biggest risk?
Well, a couple months ago, my answer might have been different, but now that, the market has been changing so drastically with I think with the speed and magnitude of the interest rate increases, it has, spooked investors. It's, put some wind in the sail of borrowing. Um, but there's still a lot of capital out in the market. Investors want to do deals. They need to place capital. So deals will still get done, but I think the the risk that we're looking at now um, is being able to continue to do deals, but looking at the severe impact that the interest rates will have on your cash flow. Um, especially for us, what we do, we're value add. So our cash on cash is, already a little low. We're more about, when we dispose of the asset. So when you are in an area that we are and the interest rates are increasing, we have to really step back and really scrub the underwriting, be a little bit more conservative, educate our investors. Some investors have stopped investing. Some have become a little bit more cautious, rightfully so. And then, we have other investors that are still going, hey, let's figure out how to make it work. So it's really just being able to realize that the market's changing now and that it might continue to be that way for the next, couple of years, not only on the acquisitions, but on our existing deals, like I mentioned earlier in our conversation is, some of our deals, we have floating rates. So it's being able to step back and forecast and look at what the risk might be. How do we overcome the risk and be more proactive right now? So I think a lot of it's going to come down to just kind of protecting cash flow, being able to underwrite new deals and realize that we're not going to get the 18, 19, 20% returns that we were able to underwrite a few years back, and be satisfied that we might get 11 or 12%, which is still really good as a return, and that apartment investment is still the top real estate investment type. And we've been in difficult cycles before in real estate and we've survived. So yes, there's a risk. We're not going to be stupid. We're optimistic. We're cautiously optimistic. But we also know that real estate is still a good investment, and apartments in particular, especially the asset class we're in, we're B class. So we're right in the sweet spot that when markets are doing well, the economy's doing well, C's go to B's. When the economy starts to not go so well, the A's go to B's. So we're a bit protected as far as the occupancy and rents and stuff. But I think we still have to realize that there's going to be some risk and some hit on our cash flow because of the interest rate increase. But I think it won't make us stop doing deals. We just have to be a little bit more cautious and work with our investors much closer, so that we have a better understanding of where we are, where it's going to go. I don't have a crystal ball. I wish I did, but it's hard to say. Things have moved so fast that I think just taking a step back and looking at things closer is something we need to do. But at this point, we're continuing to operate business as usual, with continued focus on being aggressive as much as we can with rents, which is going to help overcome a little bit of the interest rate increase and the inflation, and continuing to work in our technology platforms to get all the information we can to make good decisions. Is where we are.